afternoon, friends. Welcome to Konexio Technical Insight. I am Rahul Randeria, and I would be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on Nifty, Bank Nifty, as well as on the different asset classes. First of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that market have been into oversold territory. We might see some sort of cool off, and the strategy should be buy on dips. But initially on Monday, market tanked significantly. I mean to say, it has seen a intraday just like a panic situation. And from the next day onwards, I mean to say from Tuesday onwards, slowly and gradually, market started rallying. And as on Friday, we have seen again sell-off coming in on that particular weekend. So the whole week was highly volatile. Strategy was buy on dips. It also buy on dips strategy remained intact, but again at the higher levels, looking at on Friday, we saw that pressure was still intact at the higher levels, and Nifty ended on a negative note on the Friday on the weekend. Now let us go to the Nifty daily charts, and we will try to figure out what we have observed and what we'll find out what could be the trend for the next week. Now this is the Nifty daily charts. As we have discussed that Nifty opened on the weekend. This is Friday. We have seen that Friday Nifty ended on a negative note. This is the daily charts of the Nifty. RSI is slightly on a negative note. This daily charts. Let us see what is the candle on the weekly chart. On weekly, it has formed a high wave candle. I mean to say, throughout the week, the market was remained highly volatile. It opened, it went down, again it witnessed a rally, and again it closed near the area where it has opened on the weekly note. So this is a high wave candle. It is indecisive candle. Now the trend deciding level for the next week, or for the clear direction or directional trend, would be the high and low of this particular candle. So the trend deciding level for Nifty would be 17,415 on the upside. If it breaks those levels, 17,450, then Nifty will resume its upward trend. And on the downside, 16,824 would be the crucial support. If it breaks those levels, then Nifty might go into a further downtrend. So these are the trend deciding levels for the Nifty. Now let us come to the daily charts of the Nifty, and we will figure out what pattern we have seen. Now this is the daily chart. I have observed a falling parallel channel, and which we have mentioned in our last video also. This is the channel which has been formed on the Nifty daily charts. Now you can clearly see it took a resistance around the higher resistance line, and it has started correcting. So slightly, the trend seems to be slightly weak. We might see some further sell-off or more profit booking from these levels. So downside from these levels cannot be ruled out. So any pullback might invite selling pressure at the higher levels, at least for the next week. So the trend seems to be slightly weak, but this particular area seems to be in a consolidation phase. So before the start of a next upside rally, markets are into a consolidation phase on the overall charts. But for at least for the next week, Nifty might remain under pressure with high volatility, because it is a monthly expiry. So it could be highly volatile for the next week. Now let us come to the important supports and resistance level for the next week in the Nifty. For the next week, the important support in the Nifty is placed at 16,978 is the first support. Then second support is placed at 16,824, and third support is placed at 16,761. So these are the important crucial support for the Nifty for the next week. On the upside, the first resistance is placed at 17,315. Second resistance is placed at 17,417, and third resistance is placed at 17,666. So these are the important supports and resistance in the Nifty for the next week. The strategy would be that market might remain into consolidation phase. It is monthly expiry, so we might see this kind of either this way or that way, this kind of trend. So it could be, the trend could be indecisive, highly volatile. So it should be trading. It would be very tricky for the traders to trade for the next week because of the monthly expiry. Now let us go to the Bank Nifty and let us try to figure out what could be the trend for the next week. Let us go to the Bank Nifty chart. Now this is the Bank Nifty chart. Let me draw a parallel channel so we will have a clear view about the trend. So again, Bank Nifty is also moving into this particular downward falling channel. This whole circle area, which I am just I am just marking with this cursor. This whole area is a consolidation phase, but this area is a corrective phase. So definitely looking at this particular pattern on Bank Nifty daily charts, we feel that further sell-off from these levels cannot be ruled out. Further weakness cannot be ruled out. And next week is the expiry week, monthly expiry week. So any bounce back from these levels should be used to go short at the higher levels for this immediate support around maybe 35,000, 35,200 to 35,000 mark. So this could be the consolidation phase into sell on rise strategy, and at least for the month end, we might see Bank Nifty into this particular phase of sell on rise, and then we will take a fresh view. What is monthly closing of Bank Nifty and Nifty, and we'll then try to figure out what could be the primary trend. So now let us come to the important supports and resistance for the Bank Nifty for the next week. Important support in the Bank Nifty is placed at 35,847 is the first support. Then second support in the Bank Nifty is placed at 35,506, and third support is placed at 34,706. On the upside, the first resistance is placed at 36,303. Second resistance is placed at 36,578, and third resistance is placed at 37,123. So these are the important supports and resistance level in the Bank Nifty for the next week. Looking at the chart pattern of Nifty and Bank Nifty, the strategy would remain sell on rise at least for the next week. It is a monthly expiry, so markets might move in this particular zigzag manner. So just try to be little cautious, trade with strict stop losses, and do not try to play for huge moves. Now let us come to the third segment of our show, which is option analysis. In option analysis, we will try to figure out what we have observed in Nifty calls and Nifty puts, Bank Nifty calls and Bank Nifty puts, where there is the concentration of particular open interest. We will try to figure out what is the implied volatility. We'll try to figure out, looking at the price, the open interest and implied volatility, and combine of that we will try to come to a conclusion what could be the trend for the next week. So now let us come to Nifty calls. In Nifty calls, the action was seen in 17,300 calls, I mean to say out of the money calls, then 17,400 out of the money calls, then 17,500 out of the money calls, and 17,600 out of the money calls. Now here you can see in the percentage change of the option premium, we have seen a significant drop in option premium. Implied volatility is between 14.40 to 14.56. Open interest is also rising, volumes are also rising, but the most important thing is that the significant drop in the option premium. This clearly indicates that on the back of the Friday's move, smart money had or might have started writing out of the money calls of 17,400, 17,500, 17,600, and maybe 17,700 also. So they feel that market might remain under pressure at least for the next week or for the monthly expiry. Now let us come to the Nifty puts. In Nifty puts, you can clearly see there has been a rise in the open interest of 17,100 puts, then 17,000 puts, then 16,900 puts, and 16,700 puts. Now here you can see there has been uh, in 17,100 puts and 17,100 puts, there has been a shedding in the open interest. Now in 17,000 puts, there has been a rise in the open interest. Again in 16,900 puts, there has been a rise in the open interest. And 16,700, again there has been a rise in the open interest. Now, you in the percentage change, we have seen that there has been a rise in the option premiums, which clearly indicates that looking at the Friday's fall, smart money might have started buying Nifty puts. So that is the reason why we have seen that the rise in this option premium. Now the implied volatility is slightly on the higher side. You can see 18. It is between 18.57 to 20.36. Now with this is clearly indicating that now most important part I feel is that those people, those who have done put writing, might have started profit booking because markets were falling down. Now, when there is a shedding in the open interest and again rise in the open interest in the falling markets, which indicates that the smart money had have a view that Nifty might correct from these levels further, at least for the next week or monthly expiry. So on the downside, we feel that 16,900 to 16,800 could act as a important support when Nifty might take a pause for the next week. So this is what we have observed in Nifty calls and puts. Now let us come to Bank Nifty calls. In Bank Nifty calls, you can clearly see that the action was seen in 37,500 calls, then 37,000, uh, sorry, in 36,500 calls, then 37,000 calls, and 37,500 calls. Now here you can see there has been a significant rise in the open interest. Volume are also rising. Here also rise in the open interest. Here also rise in the open interest. Implied volatility is slightly higher. It is between 21.76 to 21.23. But there has been a significant drop in this option premium, which clearly indicates that smart money had started writing out of the money calls of 37,000 calls and 37,500 calls and maybe 36,500 calls. So it is clearly indicating that for the next week, markets might remain under pressure, and Bank Nifty might also remain under significant pressure. Now let us come to the Bank Nifty puts. In Bank Nifty puts, again, the action was seen in 35,500 puts, then 35,000 puts, then 34,500 puts. Here you can see rise in the open interest in all of these particular puts. There has been a significant rise in the option premiums. I mean to say premiums of puts. And again, implied volatility is also rising. That is between 25.89 to 27.88. Now here also, as we have seen that Bank Nifty had drifted significantly or very sharply on the Friday. So smart money might have started buying Bank Nifty puts. So for the next week, we feel that 34,500 could act as a important support for the next week. So now, overall, looking at Nifty, Bank Nifty charts, Nifty and Bank Nifty option data, the markets would remain under pressure for the next week. Now, one more thing I would like to just mention over here. On Friday, Dow Jones has also ended on a negative note. It has almost corrected more than 900 points. Let me just show you the chart of Dow Jones. Now, why I'm showing Dow Jones chart? Because this was the Friday's candle. This big candle was a Friday's candle. Now, when we have analyzed Nifty and Bank Nifty charts, Nifty and Bank Nifty option data, and again if we combine it with Dow Jones chart, it clearly indicates that for the next week, Indian markets might remain under lot of pressure for the expiry. So definitely any pullback should be used to go short at the higher levels, and any 1% correction from the shorting position, one should try to book profits, again wait for some pullback and then again go short. One should not wait for a long directional call or long directional trade. So this is the a view of the markets. Now let us come to the final segment of our show, which is positional call. I've identified one stock from midcap. The name of the stock is Bombay Burmah (BBTC). This is the stock. Let me put the indicator RSI. We will have a clear view. This is RSI. Now here, the stock has been under pressure for a long period of time. The stock has been correcting from the levels of almost 1500. Currently, it is quoting around 967. So almost we can see that almost more than 30 to 40% correction has been done in this particular stock. Now let me draw this particular parallel channel. Now this is the parallel channel. The stock has been moving downward trend. It is making low tops, low bottoms. Again, it is coming down. Now here, most important thing is when the stock was making lower tops, RSI was making higher tops, which clearly indicates it is a positive divergence in the stock. Now here, if I put one horizontal line, let me just stretch the chart so you will have a clear view about that particular formation. On the horizontal line, you will see now this is an inverse head and shoulder. Inverse, this is head, and again this is right shoulder. Let me put the volume so we will have a clear view about this. Is the volume, the highest volume of the recent times. You can clearly see highest volume in the stock. So the stock is poised for a strong trend reversal. Bombay Burmah, the short form of the stock is BBTC. Inverse head and shoulder formation, downward falling channel, positive divergence on the RSI, price volume action is very positive. So overall, everything, if we combine price to volumes to indicators, trend, everything is positive for the stock. Currently, the stock is quoting around 960. Any dips should be used as a buying opportunity. One should have this stock in a portfolio. Currently, the stock is quoting around 960. One should buy on dips to 940 for an upside target of this 1181 to 1180 odd mark for long-term investment. So the strategy would remain buy on dips. One should buy BBTC on dips to 940 for an upside long-term target of 1180. So thank you very much, friends, for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.